Hello, everyone. Good evening. Good
evening, sir.
Yeah,
Right.
I hope we're doing well.
Sorry, sir.
All right, so let's see what we can do today. Seems many people will not be available. Have you watched the video of yesterday, Moses? Or Monday, rather?
No, sir. Even for Friday, I was late to class, if I'm correct. I haven't followed for Friday too.
So what are you doing now?
I've been a bit under the weather.
All right. Under the weather. Okay. And so this is the curriculum, and we've been covering a lot. So on Monday we talked about we talked about indicators. So we're able to cover this. So Moses, you will have to go watch the videos. Right? You have to go watch the videos so that you will understand. Because yeah, just try and watch the videos so that you will catch up with whatever we're doing. I gave us an assignment, and I told us to send some information to the group, but nobody did. So how do you expect me to take a new topic? Those who were in the class last week, I said last week, on Monday, I gave us an assignment to do between Monday, Tuesday, Wednesday. Paul, why are they still like that? Gemgate. Oh boy. See Ninja settings. Abel, Simeon, I want to hear. Did you guys do the
Yes, sir. I watched the videos, Or I think I didn't get the part of dropping something on the group. I think I maybe forgot or I didn't get that part.
You didn't what?
I didn't get the. You said we were supposed to drop something on the group, but I didn't like. Maybe I didn't hear that part during the class. And it's not even on. It didn't cross my mind at all. But I
Okay.
watched the video, sir.
All the indicators we talked about, have you toggled them on your own MetaTrader 5 app?
I toggled them on my trading. And yes, on MetaTrader 5. Yes, sir. Yes, sir. It was mainly three: the RSI, the moving average, and the stock. Since you said we should stop at number 5.
Yes, now, as you can, the ones that are major ones
Yes,
first.
sir.
So
Yes, sir.
what I want to see is how you were able to follow through the video and also do it on your own MetaTrader 5 or TradingView. That's what I asked you guys to send to the group.
Okay, sir.
And when it comes to assignment, I know they hear where I be. Hey, but what about you? No response. All right. Well, Moses, to give you a little insight, we did indicators. So there are some traders that use indicators to trade. Basically, they use indicators to trade. So, Moses, do you have any idea what indicators are in the Forex market?
Uh, sorry, I'm in my. I think it's something else to do with using probably just like the name says, indicates perhaps when the market does this. How maybe I'm just guessing. Maybe the market is moving in a particular way. Then you sort of like give. If you're using MetaTrader, you tell them, okay, when the market. Oh no! Let me think it this properly. I think I'm getting the wrong indicators. Or
Mm.
is it just basically just tools that we use? Like I think Mr. Destiny spoke about this, if I'm correct. Like tools that you use on the graph on the market structure when you're trying to do some calculation and stuff. I'm not sure if I'm right.
You are close. You are close to the kingdom of God. All right. So, yeah, you can call them tools, right? But they're mostly represented by line graph, if I would say. So basically, these technical indicators, traders use them to actually gain insight on price movement, and especially when price gets to supply demand zones, which we can also say overbought regions or oversold regions, supply or demand zones. So using indicators to trade is very straightforward and very basic. So they have different types of indicators. In fact, indicators are so much these days. There's so much because you as a trader, you can even develop your own indicator to use. So the popular ones are the moving averages, the RSI, relative strength index. These are the popular ones, stochastic. So there are traders who basically just use indicators to trade, right? So indicators follow price movement. And as it follows price movement, when it gets to a region of interest for the buyer either buys or sells. Okay, I think I should join with my phone just to show a little idea of what indicators are about. So usually on TradingView, if you want to use major, I think you're only allowed to use about two indicators if you are not subscribed. If you're not subscribed to TradingView, you're only allowed to use about two indicators. So let me just show example, then we'll move on, because like I said, the class is not to see. Let me just say this: trading, much of the things you are going to learn, right? You can, okay, let me say it like this. Sorry, let me join with my. Okay, can you hear me?
Yes.
Yes, sir.
All right, so you can learn many things online, but see, there is something as the art of trading. Sorry, the art of trading, or the art of becoming a trader. You can have a lot of knowledge about Forex. It doesn't make you a trader. Because if I know all these things now, and I can't use it to make money at the end of the day through my discipline, risk management, my analysis, the strength of my analysis or competence in analyzing the market. If I can't use all these things to make money at the end of the day, it doesn't make me a trader, right? So we can teach you, give you knowledge. That's the best we can really do. But this art of becoming a trader, you will have to develop that skill by yourself. Nobody can force you into it. Nobody can groom you into it. You will have to discipline yourself to become a trader. It is you that have that responsibility. So, for example, when you are learning many things in trading, if you self-develop or you practice by yourself, you are developing yourself from the things you are learning, you begin to discover what you need and the things you don't need. As I learned Forex, for example, I discovered that these are not really relevant to my personality, so I didn't pay attention to them. It's not that I'm discrediting indicators, right? But I have discovered that for me, my personality, I don't work with this. So I wouldn't have known that if I didn't go back to practice and learn what these things are, how to use them, and see if I can really use them in trading. Because there's a lot of things to learn as a trader, but it's not everything that you will learn that will make you profitable. You are the one that will sieve the knowledge and focus on the ones that will make you profitable as a trader. So I'm saying if we don't go back to practice these things, you just think there are too many things that, and because I've not learned this one, I've not learned this one, that's why I'm not making money or I'm not profitable. And it's not so. We've been saying here, just market structure alone, understanding market structure, people make a lot of money. Like this guy, Sam, Mr. Jem Gates student, Sam, what his strategy is just market structure. From higher time frame, he breaks it down to lower time frame. And that's all market structure. And he trades gold with it. So you can imagine, and he's making money. So you need to know what works for you. And you can only discover it when you go and practice. When you go and practice. So I really want to encourage us to put in more effort, to put in more effort so that what we are learning we will not just have the head knowledge, but also practice it. So yesterday, this is just for Moses. Let me use 10 minutes or 5 minutes to do this. So yesterday I said there are different kinds of indicators. As you can see, these lines on, okay, let me make it white. Okay, so I think it's clearer like this. So you can see these lines. These lines are, this particular one is bilingual bands. Bilingual bands. Now, the idea behind this is, as you can see right now, the market is on an uptrend. And the market is above the midline. Normally, these lines are separated by different color codes. But the idea is if price is above the midline, is on an uptrend, you are buying. If price is below the midline, this is the midline. This line, the midline, this middle line you see, right? These Bolivar bands. So from here, Moses here, this, I don't know if you can see the things I'm drawing. So that's the icon to get this one. That's the icon to get your indicators. So usually when you come here, then you click on this. When you click on that, it will show you different types of indicators. For example, we talk about the Bollinger Bands, moving averages. The popular ones we talked about. There's average true range. This average true range is used to set stop losses, but it's not in the curriculum, sure. It's used to set stop losses accurately, average true range. Then there's moving average, then RSI, relative strength index. These are the ones we talked about. Then we have the stochastic oscillators. I think those are the basic ones. So let me just show you. Let's delete this because it's already on the chart. So let's click on a new one. Let's see moving average. So let's say we want to toggle on this indicator, right? So if we click on it, moving average, you see the period. You can set the period to 20, 25, depends. Then you can choose the method. If you want it to be exponential, if you want it to be simple. So when you are done, you just click here. Normally, most of them are already set as default, so you can use them with their default settings. So when you click save, it will show you here that you've selected it. So let's go to the chart and let's see how it looks. You see, it's just a line. It's just a line. Now, how do you trade with this? If the candlesticks are above the line, you are on an uptrend. Now, I think we should even use 25 for this period. It's a bit too tight. Let's use 25. You see, to give it a more space. Yes, exactly. Gives it more space. So the more you separate the periods, the more space it gives the market. You can make it 30. Just if you understand the concept, you know how to navigate through it. So once the price or candlestick is above this line, it's on an uptrend, right? It's on an uptrend. As you can see, whenever the candlestick crosses below it, like in this point, you know you're on a downtrend. But the fact is, this indicator, I think, is a lagging indicator. Yes, it's a lagging indicator, meaning that it does, okay, let's take, for example, here. As a technical trader, you want to enter the market at a good point, like here. But you see that this market moved up onto this point before this indicator gave you an entry here. So if you're entering from here, you're just taking just this move. So it's lagging. Usually it should have given you an entry at this point. But because it's a lagging indicator, it gives you entries when the market has already confirmed the price movement, either to the upside or to the downside. Okay, so if we go back to our indicators, let's delete this and add another one. Now let's do relative strength index, this guy. So this indicator, I think for me, is one of the best. So when you select it, so you can see the period 14, the levels, you can either make it 30-70 or 20-80, depends on you as a trader. So you can change the colors, anyone you want, just to work on the chart, the kinds of lines you want as well, you can select it. So just save. So let's see how it is. Yes. So how does this indicator work? And of course, you can use indicators for different time frames as you choose as a trader. So the idea around this relative strength index, this above this zone, above this 70 mark zone, right? It shows you that the market is overbought and the next action for traders is to sell. And below this 30 mark here, you see here, is oversold. And the next action for traders is to buy. So let's backtest it. Let's see the times that price got to this 70 mark and what the traders do, right? So let's go. Let's backtest it. Well, this is one point. As you can see, when price got here, they began to sell. Let's see other ones. As you can see here again, when price got here, they began to sell. So these are how indicators work. Traders who use indicators, they don't stress themselves so much. They don't stress themselves so much, right? They just wait for price to get to their region of interest and they take in a buy or a sell. So if you see when price comes at this 70 mark, normally you can do the edit that this line will be thick so you can see it very well. But this is just the idea behind this relative strength index. And this is how other, yeah, Moses, you are raising up your hands.
And I want to understand this relative strength. When the market goes beyond the 70, you mentioned that it means it has been overbought, which means that it will lead to them selling their trade. So does that mean when they're selling is that the market is not in your favor in a way? Does the price goes against you when people sell?
No, as a trader, you can either buy or sell, right?
Yeah.
You just need to follow what the multitude is doing in the market. If people are buying, you buy. If people are selling, you sell. So you follow the trend of the market. So for example,
So okay.
yeah, ask.
Like let's say everybody the let's use this indicator now. Let's say it has passed 70 now. So according to what you mentioned now, that means people will tend to sell their listing, right?
Yes, okay.
So
I mentioned something on Monday. Now, as you are entering into the Forex market, you must realize that there are different types of traders. Now, inside this market, you see like this, when me and you, they look like. There are those who trade with indicators, right? There are those who trade with technical analysis. There are those who trade with fundamental analysis. Like these ones are strictly, that's why we did types of analysis and ways of trading, right? So there are traders who solely trade. Okay, let me say it in a way you understand. Assuming that this is a pie chart, so it's distributed like this. This is just an example. So it carries different percentage. Let's say 35. This is 20. This is 25. Just rough numbers, 10 and 10. Now let's say 35% of traders are, this is an example, they are technical traders. That means they use technical analysis and all of that. Then these guys are just they use indicators to trade, purely indicators. And when I mean purely indicators, I know a guy which I made mention of, Spirit FX. He trades with indicators a lot. And he has, oh my God, he himself, he builds bots that trades for him. So he also builds indicators. So he's massive on it. I know him and he does well with it. So what I'm explaining is, as you are coming into the market, right, there are different minds and types of traders you are interfacing with. Now, if, let's say, those who are using indicators, they are at this market now and they see price at this way, all they want to do at this point is to sell. And if there is much pressure enough, they'll eventually push the market down. So there are times that technical traders, these guys, they are seeing a buy from here. Those who use indicators are seeing a sell from here. Based on this percentage, who will push the market? It's technical traders, because they have higher percentage of people in the market per time. This is just an example I'm giving you. So likewise, when you come to the market, if the buyers of traders who want to sell is 60% or 70%, that's why I sent to us a link so that we can be checking the buyers of each pair. They are showing you that buyers based on, some of these guys that provide data for trading. They have insight into markets. They might have ideas into stop orders. So they are speaking based on real facts. It's not just that they are guessing. No, they are speaking based on orders. So if the buyers for a market is to sell is maybe 60 to 70 and the buyers to buy is 30, the sellers will push the market down. It doesn't matter what the buyers want to do at that point. So it's based on the buyers of the traders that are currently in the market. So if these technical traders now, traders who use indicators purely to trade, they assume that once price, this is RSI, don't forget RSI. So traders who use this to trade, they believe that once the price gets over this region, 70 mark, it is the best time for them to sell. That's their idea. So they are just waiting for price to either pass 70 mark or touch the 70 mark or come below the 30 mark to buy. So for you, probably you don't use indicators, right? Let's say you don't use indicators and let's see something. You don't use indicators and you are in this market currently and you want to trade. Now, as a trader who uses maybe technical analysis, you use purely technical analysis to trade. For you, you will be waiting for maybe a confirmation for you to keep buying. But see, these guys now who are using these indicators, what do you think they'll be doing here as the market is at this region? They'll be waiting to sell. So it's different views, different perception. So the view or the bias that is stronger wins. There is no sentiment. It's just the view or the bias that is stronger that wins. So if this market will sell, it means that there's more bias to sell. Maybe traders feel that, oh, this market is already overbought. It's in a region where it will sell. So they'll begin to sell. Do you understand, Moses?
Yes, so which means this bias now it cuts across all types of traders. So combines both people that use indicators, those that use fundamental technical. So that means joined together, if the number of those that sell that wants to sell out numbers those that want to buy, which means that the market will tend to favor those that want to sell in a way, right?
As simple as that.
And the price reacts to that action of people, of those
Yes,
people.
I explained this. Maybe you were not in class. So
Okay, I get it.
what moves, for example, as you watch this candlestick here now, the candlestick is moving, as you can see, is moving either up or down. What is making it move is the activity of traders. They are buying, they are selling. And as they are buying and selling, the candles are being printed out. So now, okay, let me stop sharing and show us something. I don't think we did this, but I think I showed Abel. I showed Abel this. Just a moment. Because each time you are coming into the market, you should come with this understanding that there are different participants in the market. There are different participants in the market, and these participants, they determine the movement of the market. They determine the movement of the market. And the price action, the level to which each participant moves the market is different. They have those who are the major guys who moves the market. Let me share the screen. I was looking for an image. So you can see this. So from this, I don't know if it's clear enough. You can see central banks, you can see institutional traders, commercial banks, brokers. This is where we fall into, individuals who are like retail traders. Then you have companies. So on a daily basis, these guys, all these guys you see, they are in the market and they are determining the price of each currency pair or each currency you see in the market. So the actions of everybody is what determines the price you see in the market. So on a daily basis, the activities, the overall activities of all of these guys is what prints the candle. Is what prints the candle. So if, for example, GBP USD, for example, you see massive green candles on GBP USD, just understand that the buyers, the major buyers for that day is that more of these guys are buying GBP USD. So it is the actions of these guys, including yours, that determines, although our input in this market space is very small, very, very small. Even if you are trading with 100K, it's still small. 200K is still small. Still very, very small. So I just want you to understand that the actions of this put together, is what you see printing the candles. So the candles don't just form, no, they form based on the activities of traders on a daily basis. All right, so do you understand up until this point?
Yes.
All right. So this indicator, this is how it works, right? So there are many more indicators, but I think I already talked about it. So what I told them to do is to download an app. Let me show you the app. This is the app. I want you to go to Play Store, or I don't know how you are going to get it if you are using Apple. I think it should be on the App Store too. So it's Spirit FX Academy. I'm recommending it because there is a thorough teaching on the use of indicators. Like I said, the guy solely trades with indicators and he's really good at it. So I'm only recommending this, and it's not everything I want you to watch. So when you open the app, you can register for it. As you can see, the guy too is into the use of bots to trade. You can learn that and create for yourself, but I don't want you guys to do that now. So what I just need you to do is to open the Forex. When you open the Forex, you go to the advanced, then take this class, only this class. It's number one. Let me change the color of this. I think red is better. So use just this, open this. When you open it, you will see that number 1 to 5, for example, this talks about the RSI, stochastic, moving average, and RSI. So I just want you to watch video 1 to 5. Once you watch video 1 to 5, you understand in depth how to use indicators and how to set them up on your trading view, or is majorly on your Meta 5 app. So that's what I want you to do. So for those who are not in the class on Monday, this was the assignment I gave. And I said, when you are done, send a screenshot of how you set up each of these indicators. So for you to understand better, please watch these videos. Now, I know there are many other videos that might interest you, but don't be distracted. Don't watch all of this yet. So there's a reason why. Okay, so I think that will be all for this. Let's not take so much time because we already treated this class. You will need to pass the beginner stage first before the advanced. Oh, I think Abel was showing me that yesterday. I think it's just a new development. When I used it, it wasn't like that. I could adjust, I could skip the beginner's phase. But if that is the requirement, you can just skip the videos, skip, and pass. Then you go to the advanced. All right. So for today, based on the curriculum again, let me share. We're dealing with Mr. Emmanuel, if you let me know when you are set to do. Yes, so we're using, we're talking about chart patterns. So we want to study what are chart patterns. Let me copy this so I can paste it. This is what we are dealing with today. So we're looking at chart patterns. Double tops, double bottom, ascending and descending triangle, ascending and descending channel, head and shoulder. So the first thing you need to know about chart patterns is they are bullish. They have bullish chart patterns, right? If I'm correct, and bearish chart patterns. Then they have it as either continuation or reversal. I think it's the same thing. These things are the same. Continuation patterns for the either bullish or bearish side, and the reversal patterns for either the bullish or the bearish side. So that's the foundation I want us to have as we talk about chart patterns. Is there a message for me? Yes, I'm back home, settled. Thank you. Okay. So do you want to take up now?
You can continue, sir. No problem.
All right, just let me know when you want to come in.
All right, sir. No problem, sir.
Okay. Okay, so we might need to open the chat. You guys too busy. Events, station breaks. Okay, so if you remember, I told us something last, I don't know, when was that? Was it, no, Monday, I think it was last week. That first you have structure. So you have structure, right? Inside structure, you will find chart patterns. chart pattern. I think there should be an R here. Chart pattern. Then inside chart patterns, you find candlesticks, candlestick formation or candlestick, whichever one. This thing is hard, man. So you have your structure. When you find your structure, you see chart patterns. It's because as candlesticks are forming, they are forming patterns, chart patterns. As chart patterns are forming, they are forming structures in the market. So this is the order in which it flows. So I think we talked about candlestick formation last week. So now we're talking about the chart patterns. Chart patterns. So to give a background, you know, initially when I started Forex, I thought that the market just moves and there is nothing really you can find inside these candles. They are just going up and down. No. When you study the chart, the structure, you realize that there are patterns that the market forms or makes. And these patterns gives you an idea, either the market wants to buy, sell, or keep buying, or keep selling, or if the market wants to change its structure. So these candlesticks you see, they are speaking a language that if you don't know that there are patterns that these candlesticks are forming, you won't realize that it's actually speaking a language to you and you can understand the language speaking. What is, sorry. Sorry, can you see my screen now?
Yes, okay.
All right. So chart patterns are important because I think this thing looks like, although it's like magic, but before the market will make a major move, it gives you a pattern. It gives you a pattern. And if you can read the pattern, you can know what the market is about to do next. Most of the times, because it's not like 100% every time you see this particular pattern, it works like that. Sometimes the market will just do what it wants to do. But I tell you, like 80 to 85% of the time, patterns are almost accurate. And one thing I have discovered, this is my own personal discovery now, that if you want to truly be successful in Forex trading, you just have to understand a pattern so accurately that you can spot it anywhere, anytime, and you can always use it to make money. Because I have discovered that most traders, they just settle with a pattern. They understand a pattern so well. Like, there is a video I watched on that Spirit FX app. There was a guy explaining one kind of pattern that I know this thing, but the way he was explaining it, it showed that he slept with that thing. Yeah, one kind of M pattern, and he gave it name, and it didn't make sense. Like, that's all he trades. He doesn't look for, he just waits when the market forms this, and he says it works for him all the time. Apparently, he's using it to make massive. So if you can spot a pattern and master it, excuse me, if you can spot a pattern in the market and master it, I'm telling you, yes, Moses.
So what you just said now, which means so the person we have to be patient to wait until the market forms that particular pattern before it now acts. Is that what you mean?
Yeah,
So that's how we trade. Just wait for
that's how
that
you
pattern.
think. Okay, this thing you just said, I know CM will be laughing at you because I know in your mind you want to be trading every day, putting trade every day, every minute.
No.
Wait now. If you see disciplined traders, you see disciplined traders, they wait for what they are looking for. They set their trade and wait for it. And if they don't see that thing, they don't trade. That's the height of their discipline. And even in that pattern, they will tell you, okay, I'm still waiting for this candlestick formation inside that pattern, and they will still wait for it. So if they don't see it, they don't trade. So let's say in a week, they might find that kind of pattern maybe twice, 3 times, at most 4. And if they catch it, it gives them massive profit and they are okay. So it's just the height of their discipline. Okay, so let me get an image and just show some chart patterns. I don't know if CM has a particular image because there are so many online that we can check from popular ones. Okay, let me just follow the ones that are listed on the. Is this stuff I'm sharing clear? Can you all see it very clearly? Or I need to zoom in a bit. Okay. Now, so these are the examples of chart pattern. Now, chart patterns are effective, like we said on candlestick formation. It is not just randomly on the chart, wherever you see chart pattern that to make it effective. No. Chart patterns are mostly effective on support and resistance zones, key level zones. No. They are much more effective on also trend lines. Please note this. When I started trading, I thought that anywhere you just see any candlestick formation and it means the same. No, it is not. It doesn't work like that. So it's strategic. On support and resistance zones, when you see chart patterns, they are more effective. If you see them on trend lines, they are also very effective. So let's see a little bit of these chart patterns. Now, you will have to download these and study it for yourself. We'll just give an example. Ascending triangle. I think it's part of the ones that are on the curriculum. Yes, ascending and descending triangle. So we'll just talk on the ones that are on the curriculum. So this is the ascending triangle, right? So this is a continuation pattern. Okay, first of all, this is for the bullish side. And as you know, there are continuation or reversal chart patterns. So it's either that, for example, chart is on an uptrend, right? And you see the pattern maybe forming here and it continues to the upside. Or sometimes it's a reversal in the sense that chart is going up and you see the formation of that pattern, then it begins to sell. So here is known as a reversal. Here is known as a continuation. That's as simple as what it's talking about. So In other words, you will see all of this when the market is on an uptrend and it still want to continue on an uptrend. So you see all these patterns there. Then these ones, you will see them when the market is about to reverse or change direction. So if you understand up to this point, drop one on the chart, please. Okay. So ascending triangle. Now, sometimes these chart patterns can be a bit tricky. So you need to have eyes for the market, like I will always say. And the only way to do that is that you have to sleep and wake up with the chart. So that you familiarize yourself with this pattern. So the ascending triangle, as you can see, this is a triangle. Sorry for my drawing might not be accurate, but this is a triangle here. So that's a triangle that it forms. And what price will be doing is that it's creating higher highs, as you can see. Now, sorry, higher lows, but the highs are equal highs, as you can see, but it's creating higher low. Right, this is a low here, this is a higher low, and this is another higher low. So do we understand now? So in this, and I will show us in there. Okay, somebody is raising hand. Who is there? Abel, yes, Soiler. Yes, I can hear you. What are you saying? Is it just me, or can anybody hear him?
I can hear you.
Okay, Abel, you have a question? No, I mean Abel. Abel is raising up his hand. Or you know what? Can you type your question if you have any, or if it's a mistake? I don't know. If you have any question, just type on the chat. Okay. So this is the ascending triangle. Now, you will have to go and study this, please. You have to go and study it and study the difference. And majorly, the difference is in the pattern the market is forming within either a triangle or within the, what's it called, the channel. For example, these ones are the channel type, channel. So for descending triangle, this for the bearish, as you can see, it's forming equal lows, but lower highs. So this is a high, so this is a lower high, and this is a even much more lower. Now, the thing with chart patterns is they don't form exactly like the way it's being purported here. That is why I said you need to have eyes for the market. If you don't have eyes for the market, this pattern might form. It will form, but you will never catch it. I'm telling you, it will form, but you will never catch it. So don't really expect it all the time to be exactly like this. Exactly like this. Now, we also have double tops and double bottom, which are the popular ones. So it's more, okay, other traders call it like W pattern, like you can see it's forming as though it's a W, and M pattern, it's like an M. In fact, these two are the very most common ones you always see occurring in the market. So what happens is that the market is making either equal lows and equal highs. So, okay, I forgot to say, how do you trade with all of these patterns? For example, for this one, now there's what we call Elliott wave count. Elliott wave count. Now, Elliott wave count purports that within a channel or within a trend line, the market bounce makes 5 major moves. So it's like 1, 2, 3, 4, and the 5th move, the market breaks. I will show us Elliott wave count when I open the when I open the trading view. I will show us Elliott wave count. So that's the idea behind Elliott wave count. And when the market makes 5 major moves, 1, 2, 3, 4, the 5th move it breaks. So you are entering at this break. And the way you are entering at this break is that you are confirming that the close of the candle that breaks above these highs, these two equal highs, the candle that breaks it closes above them. I think that's a confirmation of a break. Now, some other traders might want a break and a retest. That means as it breaks here, it comes down back on this before it goes up. So either ways, it's just the kind of trader you are, either one works. So the same here. And also for this, you wait for price to break the neckline. This is called the neckline. So when price breaks the neckline, if the candle that breaks this neckline and closes, then you can buy. But know that this is a reversal pattern. That's why I said it must be on a support level, right? In this case now, it must be on a resistance level. So where the market structure is found, I say market structure, where the chart pattern is found, it's important. You can see this at the middle of the chart. It might just be a manipulation. The market will just continue on a downtrend after it has made a high like this, right? Like the first time we discussed on the chart, we said if, I think it was CM that was taking that. If you see a market making this high and it broke this high, as far as it has not made a low, you can't say it's on an uptrend. Can you mute yourself, please? Okay. All right. So on the curriculum, we have ascending and descending channel. Ascending and descending channel. Well, I guess it should be this bullish flag and bearish flag because sometimes the names are different. I don't know if I'm correct.
Yeah, they work in similar patterns, similar ways.
Okay, yeah. So it's the same. I love this so much, especially when I see it on a downtrending market. So for example, let me show us this. Now let me show this. For example, as you can see, I love trading with that a lot. The channel, you can use it to catch the price either to the upside which is on the what is it called now? The continuation pattern or the reversal pattern. So if you know how to catch this or understand this, you can be able to use it to trade very well. So this is like a bullish flag. Now, most times, I told us that there is a retracement that is correctional in nature. For example, some traders can see this and the market is forming this lower lower low, lower high, lower low, lower high, and they will think that the market has changed the pattern and is going to the downside. And at this point, maybe they just put in for a sell, not knowing that there are some correctional move or retracements that are correctional. That means it is as though it's forming highs and lows, but it is still a correctional move. I don't know if you understand what I'm saying. Let me draw it on the chart. So the market is moving like this, like this, like this, like this. We often draw it like this, but sometimes what you might see is this. This is impulsive move. This is a correctional move. This is an impulsive move, correctional move, impulsive move. So sometimes these correctional moves, they are actually like this. They are forming highs, lows, highs, lows, highs, lows, but it's still a correctional move. So at this point, it just moves up. But most traders are caught at this point because they think that, oh, it's already forming highs and lows. So that's why the understanding of market structure, if the market has not taken out a low and forms a new lower high, as if it's on an uptrend, you can still count it as being on an uptrend until you see confirmation. So let's move to lower time frames. Let's see if we can see some of these things. Now, on this pattern, you see that there is triple bottom, and which is what the market formed here exactly before it started moving. So there's triple bottom here. Now, like I said, it's not exactly the way it's drawn there. But if you have eyes, you can see that there's triple bottom here. Now, if you come to this chart again, look at this triple bottom. This is a reversal pattern, triple bottom. So you see market coming from an uptrend. So the market was coming from an uptrend and it bounces off 1, 2, 3, and boom, to the upside. Exactly what the market did here on the chart that we can see. So the market was coming down, boom, 1, 2, 3 to the upside. Or you can even count it as 1, 2, 3. So this is the triple bottom. So what we need you to do now is to go and backtest all of these. Go and backtest all of these chart patterns. Let me see if I can copy this image. And I'll send it to the group. Send it to the group. You can easily go online and get. Why did I send it as just one-time view? So you can easily go online, just search for chart patterns. You see a lot of them, right? So on the curriculum, there is also head and shoulder. I love this head and shoulder pattern. I love this. So this is head and shoulder. Head and shoulder. Well, for GBP USD, this is one of the major structures. Sorry. Chart pattern that it forms a lot, especially when it's reversing. Especially when it's reversing. So there is head and shoulders. Then there is inverse head and shoulders. This is for a continuation. So markets on an up, a reversal. They are both reversal patterns. Reversal from the up. The market is coming from the down part, so forms the shoulder, forms the head, and another shoulder, then to the downside. So it's reversing at this point. Okay. Which time frame should we use them? Well, from 4 hours, 1 hour, 30 minutes, 15 minutes, you can observe all of these patterns. Now for entries, as a day trader, your entry is on the 15 minutes. Well, let me say, if you see chart patterns on a higher time frame, just know that there is a major, for example, if you are seeing this head and shoulder on a higher time frame. Okay, let me show you an example instead of just talking so much. Let me use this guy. 4 hours. Now, there is one head and shoulder pattern that occurred one time. Let me show you. Or is it from daily? Yes. Although not to, like I said, can we count this? Yes or no? Let me know. Can you count this as head and shoulder or not? Let me see your answer in the chat. Can you count this as head and shoulder or not? Nice. So when you see it on a higher time frame, is a very stronger confirmation that the market is about to reverse. But on a smaller time frame, if you see head and shoulder, it's not necessary that the market want to change anything, right? So it's better you get this structure on a higher time frame. It gives you more or stronger reasons confluence that the market is about to change structure or is about to continue the structure. Although the fact is, when you check through charts, the chart always makes these patterns. But when you want to use them to trade, that is strong, when it's strongest is on the higher time frame. So maybe Simeon will talk more. No, Emmanuel will talk more on it when it comes. So you can see on a smaller time frame, you can see, but it's not as strong as you can see it on a higher time frame. It's not as stronger as you can see on a higher time frame. So also here, there's a bit of a shoulder here, a head here, a shoulder for it's more like this. This is for a reversal. So when you see it on a higher time frame, it's much stronger. It's much stronger on a higher time frame. But if you want to use it for entries, use it on a smaller time frame, 30 minutes, 15 minutes. That's for a temporary buy move you want to make on the market. You can use that in 15 minutes to trade. Okay. I hope I answered your question, Mr. Leon.
Yes.
All right. So we have the head and shoulder, which is what I was talking about. You have this head and shoulder, and then there is the inverse head and shoulder. So the idea is that the market comes to the downside to this point, right? Now, it's not always equal, as you can see in the diagram. You can't always find it that is equal. This shoulder and this neckline will be equal. Sometimes you might see it like this, like this. This is the shoulder, this is the neck, the head rather. Then this one either is a slightly higher and either equal or even a bit lower. So it's not always equal like that. But the idea is your entry is at the break of this neckline or this one, whichever one is your entry point. Whichever one is your entry point. So we have the falling wedge, rising wedge, you have the bearish symmetrical angle. So study this is for the bearish side, the bullish side, then either for the continuation or reversal. Very important for you to note, either continuation or the reversal. Okay, so chart patterns, rising and falling wedge, bullish and bearish flag, symmetrical. I think this image I sent to us captures all of the chart patterns that is on the curriculum. Okay, so I've sent the image to the group. You can use it and backtest it. Okay, let's see if we can find a little bit more. I think I've shown us this one. Triple bottom, triple top here. I think I've shown us that. So this is like double top now, double top or double touch, whichever one. So the market goes like one touch, comes down, two touch, and massive push to the downside. So here now, you can see is triple bottom, 1, 2, 3. Some people call it triple touch, depends on your use of language. So here is a very nice head and shoulder pattern you see here. Very nice one. Now you can see that on this shoulder, it still made a double top, sorry, a double bottom. It doesn't mean it cancels out on this structure. It just gives you more confirmation or entry point at this level, right? So just go and backtest from a higher or lower time frame. Here you can see is a nice W pattern, which is also a double bottom. So 1, 2, and boom. So study this, you see that that's how the market moves. 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 Sorry, how they call. So here as well, you can see this is a very nice W pattern, double bottom. So we can backtest and keep checking all of these. So let's see, look at this. I wanted to use that for an example, but it won't work. Let me see. a nicer one. But really go and backtest these structures. Structures are powerful. Structures are powerful. And the beautiful thing about it doesn't matter the time frame, right? Even if you go to 1 minute, if you go to 1 minute, you will still see structures. You will still see structures. Look at this. Look at this. This 1 minute, you will see structures. It doesn't matter the time frame. Bless you. So you will still see M pattern. Structures are everywhere. See head and shoulder here. It's just the eyes to catch it that really matters. Boom. So backtest this. Check out all the structures we have shown. So you will see that this market, even when you go to 4 hours daily, still forms market structures, market patterns rather. I don't know why I keep saying structures. So this is how the market moves. As you see any structure, once you find a structure, what you need to begin to find is the patterns that the market is forming. See triple bottom here, head and shoulder here. Like I said, it doesn't have to be accurate all the time that, okay, you see it in the way it is on the chart. This is a nice head and shoulder. If you can see it, you can make use of it. So this is market. This is market or chart patterns. Everywhere you find it, everywhere you find it. So again, just to summarize this, I think I've been talking too much. CM needs to come in. There's the bullish chart pattern for the continuation, and there's a bearish chart pattern for the continuation. So the continuation patterns are the ones you see that the market makes. Now, it's as though it wants to deceive you that the market wants to reverse, but it's not reversing. So you have to be careful. Sometimes you think it's reversing, but it's not reversing. So these are the bullish ones. These are the bearish ones. For the reversal pattern, now also note that these chart patterns are very effective when you find them on support and resistance zones and levels, key levels, support, resistance, whichever one. So when you find them at such levels, they are very, very effective. Although some of these continuation patterns can form at the middle of the market, the chart rather, but some of these double top you are seeing, double bottom, triple top, they form, yes, head and shoulders, they form at key levels or support and resistance zones. You can see some of these ones at the mid of the chart, for example, like the ones I showed. You can get them when the market is, let me see, 4 hours. Yeah, so some of them, like you might, okay, for me, I use, gosh, do I really need to say this? There is something I use called psychological levels. And when I see, as you can see, these chart patterns, they are always on a pink line. Pink line. So these are my psychological levels. If I see them on my psychological levels, I use them to trade. I use them to trade a lot. So it should be on a level that is you understand that market is making a major move at that point. So you can use them to trade effectively. Okay, do you have any questions so far? Any questions so far? If you understand the teaching, please drop 2 on the chat. If you understand so far, drop 2 on the chat. If you have a question, drop 1 on the chat. So Moses, Abel, we ain't following the class, eh?
Hello, sir.
Respond. If you understand, drop 2. If you don't, drop 1 on the chat, then I can call you.
That means that your phone is not safe. That means your phone is not safe. Your phone with you is not safe.
Okay, so if it's understood, there's no question, right? So please go and backtest, study the chart patterns, and please, CM, you can take on from here if you have to add to the class, please.
All right, so thank you very much. So good evening once again to everyone. Much has been said, and one thing I can actually just assure you of the summary of everything is that whether you like it or not, okay, these are the things that you would see consistently while trading, and I can so promise you that if you learn and know them already, you understand. So they will literally give you a edge. It's not sorry, you can't do without, you understand, it's going to give you one edge or the other. So for example, I remember I shared a trade in the group today. Chart pattern was also part of what I use getting him, you understand? It's not necessarily chart pattern, right? But it's part of my confluence of me getting into that market. All right. So when you have what is it called? Okay. So when you have a situation whereby you've been able to master some of these things that might look minor or might not necessarily look serious, you find out that just like what's it called? Just like that has been said earlier, all these things are the things that you pick together in pieces. You understand? You have to learn a lot and then later on filter what actually works best for you. So there are things that later on you pick in pieces and actually put together. So if you look very well, the chart I sent in today, right, chart pattern was actually there. You notice that that's actually an ascending channel. All right. So an ascending channel into, if you also look, I think, is it the day we did morning section sort of, then I think what were you even talking about? But I remember I was talking about the fact that okay, maybe one market would drop or one thing or the other like that. And it happened, right? But one of the things that results to that as well, or should I say that added to the confluence, was still also what chart patterns. All right. So, but now the question now is, am I just using it blankly? You understand? The answer is no. All right. Using it together with other things are actually what makes it make sense. All right. So that's literally what makes it make sense. All right. So if you look inside of here, for example, I think this was where I was today. And yeah. So let's say I'm plotting from this area to the top. You notice that with this alone, you understand there's a sort of like ease that it brings to your trading. You get now, like I said, you don't just use them blindly, all right? But originally you'd see that okay, we have sort of like something bouncing inside of a channel. You understand? And so that's why it's referred to as what's it called? The ascending and the descending channel. But now, like I said, this actually just gives you a cue of the directional movement of the market. You understand? Not necessarily that okay, this is one thing that you use to trade, all right? Like I said, it serves as a confluence in your market, right? And if you can get the confluence right, you figure out that you would making a trading decision or anything of such. So if I draw a single line, and all I just do is duplicate that same line, all right, when I'm dealing with ascending, descending channels and stuff like that, okay? So, and in situations whereby we now tend to have things like this, whereby let's assume, for example, do not go according to plan, things in this scenario, you understand, I know why it's happening, you get. And I remember this very day I was talking about the fact that we're having equal highs over here, you understand, double tops, basically, you understand, you're even having equal lows. These are things that when you train your eyes to see them, like as I said earlier, you are literally going to see them easily on the charts, all right? So you can see right there, we have equal highs, liquidity was sitting around that level, a lot of things were happening, you understand? So, and that area was taken out successfully, all right? So the other time again, we made mention of what's it called, head and shoulder, you understand? You have the notice we have one, two, three, all right? And then we have it coming back in here, and then the market continue with what it's doing, right? So now the question is, how is it explicitly a chart pattern, right? So you notice that we have the right, sorry, excuse me, I don't have this. Yep. So you notice that we have it to the right hand side, also the left hand side, the top, the right hand side, and you notice that inside of the supply and demand zone right here, the market actually came back there and tested, right, after we actually had that neck break, basically, right? So now all of these things, you put them together, you find out that they give you confluence as to your trade, all right? But you do not just use them explicitly, you understand, like solely. You don't just use them solely. So that's just basic. So a lot has been said, honestly. And if you take your time and you keep looking, like as this chart is currently, I can continue to like pull out different chart patterns. You understand? As I am just looking at the chart randomly, right? So the more you train your eyes to see them, the what's it called? The better it is to your advantage. You understand? And when you understand continuous chart pattern, you understand reversal, you understand all those things, you get, it's going to really, really, really help you. You know, you made mention of triple top. Look at these 1, 2, 3 pounds. You understand? The market came down for a while until it actually break out off from the neck. You get what I'm trying to say, right? So we can continue on and on and on like that, all right? And is it also in the situation of flag? You understand? Like, and something which was mentioned was the fact that when you see them on a high time frame, like it makes it make sense, right? So let's just assume that okay, I've deleted everything. All right, so let's assume that this was my higher time frame, all right? And this is the direction at which my chart is going currently, all right? This is the direction at which my chart is actually going at the moment, okay? So, and I can say that this is a what? Just a correction. You guys, like you would always see them. Look at it right there. It seems like it's easy for me to see them. Now it's basically because I have mastered it over and over and over again. All right. And then you come here again, you have something similar again. You can see the way I'm just duplicating them, not even drawing anything new, I'm just duplicating. And then the same thing continues on and on again. All right. So that's just how these things works. Okay, so please do your best, master this. Now, if I was to give an assignment, what I would tell you is that all the chart pattern that I would actually discuss today, I want you to go on your chart and pull out 5 for each of those chart patterns. You understand? So, for example, I think we looked at the continuation, which was roughly like 8, if not more than correct.
Yes, keep the group active. Pump in chats. Let us see. These boys,
Sorry, is it?
I mean, these boys, they do like say they're lazy. They know they want to do assignment.
Honestly, but that is really what is going to help you guys. Honestly, that's just what is going to help you. So we have 1, 2, 3, 4. Okay, for the continuous, we have 8. You understand? Or let's just say we have 4. All right, for both bullish and bearish. For the reversal, we also have another 4. You understand? And I can tell you, okay, get 5 each. You understand? For this chart patterns, that's like I'm like 5 for 1. So you're going to having 20, you're going to having 40 charts altogether. So by the time you take your time to look for 40, you understand? Now, I know it might be difficult, but basically, this will acquaint your eye to seeing it more often in the market. You understand? So it's going to like train your eye to look for them, to see them. And that is why whenever you now come to the chart this week, you understand, you easily can figure them out, easily can pull them out anytime, any day, having no stress, having no problem whatsoever. You get. But if you do not do that, it's going to always be difficult for you to see what is going on in the market, all right? And that is it. So someone actually is asking the question that, but my charts might be wrong. Though. First, to start with, I don't like this kind of mindset, all right? I get the fact that, why would you have the mindset that it's going to be wrong? It shows that maybe you're just going to do whatever and just leaving.
These guys.
It's already not even done it. You're already assuming that it's going to be wrong. Does that mean you're prepared to just do anything? You're not prepared to be diligent enough to get the right thing done. You're not diligent enough to like. If I was going to like literally, let's say, dash you money, if you get it right, you will not tell me that your chart might be wrong. Literally, one. If you're in my class in school proper and you have to get graded for this for you to make progress, you will not tell me that. You understand? You will literally go out how it's going to be right. Come on, these things are mindset. And if you continue with this kind of mindset, it's going to affect you. I can bet that with you. You understand? So please, I need you to change that kind of mindset. Don't have the mindset that okay, it might be wrong. Even if you don't get it at the end of the day, you understand? Go with the
Right?
mindset that okay, it's going to be right. Sorry, sister.
Yeah, no, I'm just noting with what you're saying.
So
Okay,
please,
that's
the
why we're
mindset
here.
matters a lot. The mindset matters a lot. If you are going with the mindset or with this kind of mindset, no, it's going to be very bad. I'm sorry about that. All right. So please, we are given an assignment. Do it. It's one of the things that you need to get prepared for. If you know you won't be able to do your assignments, you need to do some of these things. Well, I can promise you that you will struggle. That one I can promise you for sure. That you will what? You will struggle at the end of the day. And I can bet it to you that you will not make progress. Not because I don't want you to make progress, but it's going to be difficult. Why? Because this thing needs time. You need to spend time. You might think, okay, maybe Pastor just come here and it just, if you know since then he has been on this thing, if you know how much hours he has spent, hundreds, if not thousands of hours that he has spent on the market for him to see all these things. You see the way his chart was. You see all those, like, especially those flags, the way it was just, he used them constantly. That's why it's there. You understand? So if you do not get yourself acquainted to it, if you do not want to make sure that it's correct, you would actually find it very difficult, because at the end of the day, I can promise you that you cannot just have one system. You understand? You need to know how to combine system. You get, for example, even if you're an indicator trader, for example, you need to know how to combine different indicators to actually get a very fine-tuned result. So let's assume that I'm purely an indicator trader. I need to know how to combine moving average, maybe that's simple moving average with exponential moving average. I understand that simple moving average and exponential moving average are two different things. You understand? That's why one is called simple, one is called exponential. Now, I need to know that, okay, simple moving average lags more than exponential moving average. Now, exponential moving average is going to be better for me when it comes to entry. You understand? All of these things I'm telling you now didn't just come. I'm not just saying it randomly. I'm saying it based on what I have done, what I have researched. Now, if I did not take time to go and dig down and do all of these things, it's going to be a problem. You understand? So if I want to use a moving average on my chart now, I know, okay, on this particular this is the number of moving average I'm going to use between this one and this one. You understand? So you can't expect me to be on a lower time frame now, and you expect me to be using something as 120 on the lower time frame moving average. I don't know if you actually understand what I'm trying to say. So that's just basically because I have fine-tuned what works for me. If I decide out, okay, I want to use a moving average. You understand? And now, if I want to use a chart pattern, I necessarily might not be using all the chart pattern. For example, there's a chart pattern that is called symmetric chart pattern. Now, if you ask me to look for symmetric right now on this chart, you understand, it might be a little bit difficult for me. Why? Because I don't use it quite often, all right? But that doesn't still mean I cannot get it out. Let's do a quick test. Boom. Go and Google what symmetric is. Come back and tell me what it is. If it's this, sorry, if it's not this, I owe you something. It's as simple as that. But I don't really use it because it doesn't really align with my, what's it called? But that doesn't mean I don't use chart pattern at all. You understand? So like I said, what I sent to the group today, you know that there's a chart pattern there. You get. So please, all of those things are really, really important. All right? Exactly. All right. So that's it. That's it. So just to make sure you put in your best energy, you put in your, like, I feel like there's a level of what's it called? There's a level of hunger that you need to rise to. There's a level of horizon in terms of hunger, in terms of desire. Yeah, you understand that you will not, you would literally work towards it. You understand? So even if it's wrong, you bring it in, you get, still help you out to still go back there to make sure it's right. You keep doing it until you get it right. If you keep doing it and you do not get it right, so if you do it, you do not get it right, and then you forget about it, all right, it means that when you fail as a trader, you would just be a failure as a trader, right? And which is not good, all right? So don't be, I used to tell people that failing, if you fail, you have not actually failed. You have only figured out a certain way in which that particular thing does not work. You understand? So it has added more to your knowledge and your experience, because whether I like it or not, you're going to go into trading with experience. You cannot become a profitable trader if you do not have your own personal experience. You need your own personal experience. It's just when I come with you with God and say we want to have a personal encounter with God. Yeah, sort of. You understand? So you need to have a personal experience with the market. All right. So that's basically it. So please, 20, 5 each. That's 20, 20, that's 40. So at least we should be seeing 40 charts from just a single person. And when you you mark it out on your, write it. This. Don't just draw lines and then send it. Write it there that this one, or okay, this one's a flag, so that I know that, okay, as you are drawing it, as you're seeing it, you know what you're seeing. It's not just that you know how to see them, but you don't really know what they are precisely. You understand? So you see a double top or double bottom, you understand? You write it there, double top, double bottom. All right, you see head and shoulder, you write it there, head and shoulder. All right. So any other question so far? Any other question? Any other question? All right, yeah. Yeah, please speak.
Okay, thank you, sir. The assignment is for us to identify the chart patterns, right? All of them.
Yes.
Hmm.
So basically, you have to what's it called? Go into your chat, just like I am right now. All right. All right. So let me just give you a template of how you're going to do your assignment. So let me delete everything I have here. All right. So let's assume that one of the chart patterns that I want to what's it called? All right. So one of the chart patterns that I want to send to you guys is going to be an ascending channel. All right. So I can easily come here and I would say, this is my own ascending channel. And when I'm done this way, right, you can actually take a text, right, and then you just put it beside it. Ascending. So you leave it like that, all right? So you can say, okay, I have my own ascending channel right here, right? You can write it maybe when you're sending it or however. You can just write something like, so let's say I want to do a descending channel. So for example, it's a descending channel right here. It's just the inverse, just like we have the bullish and the bearish. Okay. So I have the descending right here. Right, and I just duplicate, sort of like the same, right? I just write descending channel. All right, so now, but for this one, the moment you're done with the first one, all right, let's take a shot, all right? If you are using TradingView exactly, all right, this is the TradingView, you know, the copied version. Okay, so if you're using TradingView exactly, there's going to be an option to what's it called? Download, take a picture, copy. You can decide to do whatever, whichever one. All right. So I can come here again and I would say, all right, double top. Let's say I want to say double top. All right. And then I'll just speak this again, just right there, double top. So just take that as double top. All right. Please write it in full. You come there again, you take a picture. You understand? You take a picture and then you move again to the next one. So for example, let's say I'm looking for double top, right? You make sure that you get 5 double tops. You're looking for double bottoms, right? Here's another double bottom right here. So don't think it will be easy for you guys do it the way I'm doing it right here. Because obviously it's not. All right, but don't worry, you guys will get there, okay? So I can come here and I'll just be like, this is my So sorry about that. So guys, that's all from my hand. And I hope to see you guys' assignments rolling in, even from tonight. It's no problem. All right. So that's just basically, and please, if there's any other question, if you forget to ask here, please always drop it in the chat. Okay. There's a way we can actually make that our group very lively. All right. But you guys will contribute more to the liveliness. You get, if myself, Pastor, maybe, and Mr. Destiny is just the one usually maybe talking about chat related stuff, it won't be too nice. And funny thing is that it's something that we literally could do every day. You get, but you guys are majorly, you need it more. You get, so when you ask questions, yeah, there'll be someone to respond to you. We all rub minds together and stuff like that. All right. So I think what I'm going to be doing now, technically, is that I'm just going to send a random chat and I'll ask someone to analyze it. Like, let me just hear your opinion about this particular chat. So maybe that won't get people to talk. I don't know. So maybe we'll try some other techniques and some other terminologies to see what is going to work. All right. Thank you very much once again. Have a wonderful night.
All right. Good night.
Bye.
Yeah.